Like to welcome to everybody to Crypto Clarity Podcast with Node40. And our special guest today is Travis Lander from SoftLedger, which is a company that Node40 has a lot of relationships with. We've very friendly within the industry. So welcome, Travis, to Clarity.
Thank you for having me, Norm. Happy to be here.
Anyway, Travis, just kicking off the podcast, as I usually do with a lot of the guests, I'd like to just touch base on your personal background first, just to get a feel for what you do within crypto, accounting, and software.
Absolutely. So I came out of school with a finance degree. I was in Silicon Valley and started working for a tech agency that focused primarily on kind of experiential and digital asset transformation. So we work with a lot of like bigger brands as they were starting to adopt all the different things in the digital ecosystem. So it was like, new websites or new experiences that you could do with just the technology and digital that wasn't there before. So that was great, super fast paced, worked with some big brands like, New York Times, Audi, all these kind of like big hitters as they were trying to adopt their new kind of digital strategies. Did that for 4 or 5 years. It was a British brand, so I got to go over to London all the time and like meet with all these really funny, sarcastic Brits, and just got a flavor for like how fast software can really kind of adopt new trends or take customer feedback and take new things to new levels for these different brands. Did that for 4 or 5 years, worked with all those different brands, but realized that I really wanted to start working at, a brand itself, a company, and really takes software from the start to the end. The thing about working at an agency is, you fall in love with this idea, this product that you're producing for like a month, 2 months, and then, it's delivered and you're moving on to the next thing. And I really like being able to see how things iterate upon, ideas and different trends coming to the market. So I wanted to find something I could really be at the beginning for and then kind of see it adopt all the way through. So after a few stops along the way, I found SoftLedger in 2019,
Okay.
where I started working with Ben and Jeff, the founders, to be able to kind of help them bring new customers to the product they had started to produce.
I see. So at the agencies, you sort of come in almost in the middle, like a company may request some sort of a software product, like you said, for the digital or digital interfacing with customers like at Audi or whatever the other clients you may have, and you sort of come in the middle, deliver the product, and the company may continue to develop from there. You move on to the next project.
Precisely. Yeah, they'd come in and say, hey, New York Times, right? So, hey, we have more and more digital subscribers or whatever it might be. How do we get people to actually interact with our, New York Times app or whatever it is? Or Audi might say, hey, we realize when people get test drives, for instance, they convert at 67% or whatever it is, the conversion rate. How do we get people to book more test drives? So it was usually like a specific problem solution that was short paced, maybe even like these short sprints to be able to say, hey, come here and go there, versus, hey, here's the full picture. Here's everything you could possibly be working on for this brand. So it was very, very and short lived, which is great in its own regard. You get a lot of experience, but I very much wanted like the bigger picture.
And what are the experiences like for the young people out there? What are the experiences you get at those kind of companies that you take to a soft ledger, just out of curiosity?
For sure. I mean, I came in, again, I had that finance background. So I was, whether I liked it or not, like an Excel, kind of wizard. I had done some investment banking stints in college too. So you kind of like, they take your keyboard or sorry, your mouse away, you can only operate on the keyboard. So I got really good at making like campaign reports, for instance, in those companies where, hey, they had a digital campaign where they wanted to sign up more subscribers. So I could really, run those numbers and get some analysis on things. So that helps in all regards, particularly with SoftLedger. Of course, it's an accounting product and you cannot take Excel away from accountants. So it helps me connect with customers to be able to work with Excel still. Can't take it away. Other things were just kind of account management. So I got a really good sense from working with people at that company to kind of understand what kind of questions you're supposed to ask your customers that they might not necessarily think to be asked, right? Like if we're trying to produce things for our customers, they might not necessarily how to tell us what would have really helped them, like cut down time on working on things or less mistakes, what have you. So you start to learn what questions to ask versus just only listening. You're starting to kind of lead them to realize changes to the product that would benefit them without them kind of even knowing it. So So you start to guide the conversations a bit just from kind of knowing how they might get to where they're trying to get to, versus them kind of dictating conversation to you. You're pulling it kind of out of them sometimes. So that was really helpful. It's a tough skill to acquire, I think, of, kind of coming in and understanding problems in their day jobs, their day-to-day, whatever their industry might be, and then realizing the solution from those conversations and trying to present them, hey, here's something we could do, right? Or, would this solve that kind of problem? Does this reduce the amount of time you're spending on whatever it is? Just from trying to be able to have that question answer and kind of like that relationship.
Going back before even SoftLedger, what do you into you mentioned you were in investment banking and you had a finance background. What do you from that into like software specifically?
Having gone to school in the Bay Area, even though I took a finance, I had a finance degree, I've always been interested in business. You couldn't escape at that time in particular, like software was everywhere. So, that was a lot of what was available when I was coming out of school. And I'd always been interested in software, like, the that I was growing up, you become the tech guy in your family, right? Or whatever it is, and you just get interested in how things work together. So that's what drew me in. And then, for the company I worked for right out the gate, what I really liked was the companies that they were working with. Like was gonna be able to have that exposure to some of those big brands and just kind of be at the forefront of whatever the new technology was, right? At the time, Apple Watches were coming out or whatever it was. So it was this whole new world of what can you do with an Apple Watch? Is it this fitness kind of apparatus that you're having with you? Or is it, some sort of new notification that can come through a new application? So I really looking at the forefront of discovering like what could people do with the new kind of tech that was coming out or the new kind of concepts that were coming out.
It seemed to be that you went from these agencies that were helping with the marketing programs of these companies to SoftLedger because it was effectively uh, a company where you could develop the software from start to finish. Like, what else drew you to SoftLedger? Well, actually, let me back up. What does
Yeah,
SoftLedger do? What is SoftLedger?
sure. SoftLedger is a more modern general ledger accounting system. So in its name is general, right? So we work with a lot of different companies in different verticals. So you can think of it as like a means to graduate from, a QuickBooks or a Zero, right? You're becoming, a small, medium business enterprise, and you need a general ledger that can kind of cover you from a back office perspective to get you through from all the different, entries you have throughout your company for running your business to producing financial statements, for instance, or management reports. So what we really specialize in is multi-entity, multi-currency, and digital assets. So if you're a company that has, you become a multinational, for instance, you have operations in Canada and the US, or, over in Europe, across seas, you would have, 3 or 4 or 5 different entities, and they might report in different currencies. So on, lower based systems, you might only have one company. It's a little more straightforward. Once you get to the, the higher stage, you have this, hey, we report in euros over here, dollars over here. We want to see everything together. So in SoftLedger, it's a real-time consolidation system. So there's never like run a consolidation where you pull from all these different places. It's always consolidating. And then on top of it, we also have a dedicated digital asset module where if you're operating with any kind of digital assets, Bitcoin, Ethereum, your own tokenized real estate or whatever it might be, there's a specific module to have all that information in and then bring that into the general ledger for those types of reports like financials or management reports.
So Travis, like even just for some of the people that may not be familiar with these accounting systems, like if we were to take let's say a traditional company that is a
Mhm.
small business that is specializing in making parts for refrigeration units and they buy some parts from a Canada. They have a small operation in Canada, then they
Right.
for parts here in the United States and put them together. Like what exactly what are they looking for from SoftLedger? What do you mean by the accounting systems and what are the complications that you all solve for those two companies paying each other for different intercompany transactions that are
Yeah.
consolidated at some parent?
Yeah, you quickly realize how complicated it gets. Even in the question you're asking, it's like, oh my goodness, we have different vendors that are providing different parts. Oh, it's different in Canada versus the US. So you start to realize just how much, I guess, kind of like metadata or contextual data comes along with the activity for running your operations. With that, there's great up with it, right? Because if you're really good about how you're tracking and tagging all this type of information, you can get really rich reports out of it to better understand, hey, maybe vendor A is charging 10 cents for a piece of that refrigerant or whatever it is, and 5 cents over here. Well, we should really be maximizing what we can do over here in terms of efficiencies with this partner versus that. And then if you have to also go on to the next level of trying to consolidate and from a kind of business perspective, understand how you're doing across multiple regions, it gets really hard to compare apples to oranges, right? If you have, euros on one entity and Canadian dollars on the other, and US on the other, well, how does that all come together? And what exchange rate are you using? Is it different at different times of the year? Are you accounting for the variations that come with, fluctuations from exchange rates? So it quickly gets more complex than you realize as soon as you open up that second company than just running, the Travis Lander LLC. It's then you have S Corp, LLC, you might have different subsidiaries, and they all have to roll up and be consolidated in the same place. So like you had said, when you have multiple companies as well, you sometimes realize that one of your, maybe subsidiary or child companies is a customer of the parent, right? Where, hey, you have to pay them for services that you're performing at the parent level for some of those back office functions, for instance. So we have things in place like intercompany entries that make those types of transactions a lot more straightforward than, hey, let me have an entry in the Canadian company, let me have an entry in that US company. You can do that all in one entry. So there's a lot of nice little efficiencies we provide for our customers that operate with those different entity structures.
And Travis, you mentioned like the indexing, the labeling, the tagging. Is that once you do that, like what portion is manual, what portion is automatic, programmatic, that basically drives the efficiency for these companies as they repeat operations,
Certainly.
intercompany
Yeah.
transactions or vendor purchases or whatever it is.
Yeah, you hit on a couple of keywords for us and kind of like automations and programmability. So the first piece that I hadn't mentioned before is SoftLedger is 100% programmable. The best way to iterate that from a more technical perspective is our user interface is actually making calls to our API. So everything you see in our UI can be done programmatically. There's an API endpoint for it. So if you really are scaling and you, from a transactional standpoint, have a lot of volume, if you have an internal database or other sources, it's very easy to have some logic to recognize that activity and create journals or crypto transactions or whatever it might be in our system in a programmatic way. So hey, you have let's use a digital asset example, right? You have a wallet where you have certain transactions coming through. If you know, for instance, all the transactions in that wallet are for a particular customer of yours, if you're an exchange, you can have it so whenever you see that wallet as the transaction source, you're tagging it with customer A, which is its own object that can be tagged against it within our system. So that's a very easy kind of use case. And then the other piece is if you're not as maybe scaled in terms of volume across our product, just from the UI, if we're ignoring kind of API type of programmability, we have the concept of recurring entries. So say you have, straight line depreciation you have to enter, for instance, from some sort of large equipment purchase. You can just set that up once, like set it and forget it and say, hey, this is a straight line depreciated entry, 12-month type of schedule or something like that. It's $1,000 coming off every month of depreciation, and then not have to worry about it. You set it up from the beginning. Same goes with like recurring bills or anything else that's going to be done over and over again. You can have that concept of something recurring being created.
Yeah, so you mentioned a little bit there about certainly it's a crypto clarity podcast, and we talked a little bit about like a base case, like some company with cross-border operations in a traditional sector. So then, how does SoftLedger take that and layer it on to digital asset type companies? What
Yeah, yeah.
and what are the pain points for those companies? Like what is Ledger seeking to solve for those types of companies?
Sorry, can you repeat the question? Cut.
Yeah. So what does SoftLedger do in the digital asset space, and specifically like what points is it seeking to solve for the companies in particular in the digital asset space as compared to our original example, like some traditional manufacturing company with operations in a couple.
Yeah, I guess the biggest digital assets that we see across customers is, hey, if you thought transactions before crypto were voluminous, right? And you had, you're sending bank transactions from one company to the next, or you have customers paying you monthly or yearly, whatever it is, think of that times 10 or times 100, right? What's nice about crypto is you have much cheaper transactions. It's much easier to send things. Everything's identified and easy, particularly if you're doing things on blockchain. So you're just going to have way, way more volume. And with that, right? So with those efficiencies from a business perspective comes a challenge from an accounting perspective. So if you don't have a plan or a strategy in place to actually account for that activity across all these sources that you might have them within, you're going to quickly find that you're going to fall behind or have duplicate entries, or you're going to be missing pieces of your stack. So it really becomes important to understand your full kind of what we call digital ecosystem, whether that's like public addresses that you maintain because you hold the keys for them, or you have exchange traded wallet, or even cold storage, right? You have to know where all this is happening and then be able to take all that information and bring it into a system that will make sense of it. So with each of those kind of like micro transactions, there's always a financial impact behind it. So whether that's, hey, I'm trading, I'm just a standard trader, right? And I have to understand, hey, where am I long? Where am I short? Where have I made money? Where have I lost it? Like you have to know at a transactional level what your cost bases are, what your lot information is, where you're pulling it from, and how all that translates into kind of fiat-based kind of normal journal entries to compare against the rest of your operations, right? Your payroll, your other expenses that you might be paying in fiat, all those types of normal things. You want to bring that into, the same type of financial statements or reports or whatever it might be from your digital asset operations. So that volume, I think, is the biggest complexity for the most part for customers.
So Travis, you mentioned okay, so I guess one pain point is within the digital asset cryptocurrency space, you have a lot of massive amounts of volume that you have to deal with, right? Would you characterize that for traders, or would you characterize that for, I guess, traders, exchanges? And if so, how do you handle the volume for the number of transactions that you have to deal with? Like, what's the game plan to deal with that? Because I know that's a pain point throughout the entire industry.
Sure. Great question. And classic answer is it depends, right? We do serve customers globally, so it really depends on jurisdiction and what's acceptable. Of course, that's the first thing you have to check and talk to your regulators, whatever it might be, your auditors, to make sure you're doing what's in line with what's expected for your jurisdictions that you're reporting in. But once you do get to the stage of mass volume for your transactional activity, there's always a decision of what is accounting necessary data, I think is the terminology that we generally use, right? Like, what do you really need to bring into a general ledger? Sometimes customers might come and think they have to record all their order book activity, fills, all the different things that come into actually creating a financial impact. Really, what actually contributes to revenue or expense, right, or an asset you have to represent on your balance sheet, it's really helpful to look kind of backwards on a reporting back to transaction source type of viewpoint of, hey, does this actually impact anything from a reporting standpoint? Once you get to that clarity, which takes some time, you figure out what's relevant, there's always also a decision to make of, can you like batch or aggregate activity into the same type of source? Will it have the same accounting treatment? So a common scenario there is, say you are an exchange and you're pulling revenue for daily trading fees or whatever it might be. Do you have to really segment those up to the second of all the different, transactions you're actually servicing? Or can you say, we take a daily rate for this, USDT or, Ethereum we get back for whatever actual activity we're servicing? Can you put that into a daily amount, or is it a daily amount per wallet? Or you just have to look at your full structure and think, what can I distill down and then bring into my general ledger from an accounting perspective? On top of that, I would say something that a lot of customers can sometimes initially struggle with is, how do they source this data, right? There's so many different ways out there to actually get the underlying data. There's a lot of really good like scanners, for instance, for on-chain data. Exchanges have gotten better and better over the years with the rich data they're supplying through reports. But if you get to a level where you have a lot of different sources and activity going on across different wallets and different entities and with different types of transactions, that's when we really recommend going with a partner type of approach for us. So that can be someone like a NODE40 that really specializes in the data aggregation and normalization and the kind of conditioning piece to get the data from all the different sources and enrich it and kind of make sense of it before it comes to a general ledger like SoftLedger. So there's all these different tranches, I think, for our end customers. And once they get to that hundreds of thousands of different transaction volumes per month type of stage, if they don't have a programmatic or aggregated or partner approach, it's going to be a really big uphill battle. So we generally make that recommendation at that volume level.
Okay, got it. All right. So that's interesting stuff. Let me ask you this to geek out a bit then.
Yeah,
Let's use an example, like you mentioned, exchange, or let's say a cryptocurrency miner that's providing proof of work and generating digital asset service income.
yep,
So, like in terms of all the steps, I just want to think through it, like and provide an example to people,
sure.
real life example of where it comes into play in real life. So, an exchange is generating fees. The exchange may be located in the U.S., Canada, Latin America, Europe, Asia, wherever it may be. It potentially generates fees in digital assets and converts those to its local currency or some other, maybe it converts those to US dollars and then converts that to its local currency.
Yeah.
And I guess you'd have to understand how that exchange is set up in terms of multi-entities or even the miners so that you can understand where it's transferring. Let's say it's generated those fees, it's converted the crypto into
Mhm.
fiat and into maybe another functional currency, and then moves those to some other company that pays vendors or maybe has a treasury company. Um, and then that, or like a miner has a company that's paying for power or whatever it might be. What are all
Mhm.
the steps there? Like, do you meet with the clients and start to understand that line of business and develop and start to index that data so that it becomes automated there? How do you actually get that from, you have one example I gave you to apply it multiple times throughout the course of several accounting periods?
Yeah, it's a great question. You can tell you're definitely in the industry norm because we know all the different complications and steps this all goes through to actually get to the point of value for the customer. So you're exactly right. Like, for us, we've broken it out into like a 9 or 10 step approach when we go through implementation. And for the purposes of digital assets, the first real things you focus on are the deliberate creation of what we kind of consider list data. So that's like setting up your entity structure and reporting currencies is the first thing, right? Hey, yeah, like we talked about, we have the Canadian entity, the US entity. You just create those entities. You have the data behind or the information behind their addresses, where they are, the currencies they report in, et cetera. As the very first thing, you want to create your chart of accounts to cover all the different types of activity you're actually running against. Make sure you have like a loans payable account, or you have specific accounts set up for all the different assets you're operating with in digital. And then what we do is we go through kind of a digital asset ecosystem questionnaire or a means to gather all those different sources, right? Your wallet addresses, which exchanges you're operating on, volumes estimated within them, different types of activity within them. So of course, if you're going just kind of standard mining revenue coming in, it's a little more simple than, hey, we operate in DeFi or other things that are a little more complex as well. Once we have that, we go through again another kind of deliberate approach to creating your wallets in our system. And for us, wallets are tied to entity structure and have some automations with accounting tied to them as well. So once you have that kind of structure set up in place, it's really just about taking examples in each of those different wallets, understanding what's happening, and then going through a process to automate it. Whether that's through Excel templates, right? If it's small enough volume, that's sufficient enough for you, or you have an internal bridge of all your different sources to an internal database on your side, and then splitting that out to the right sources, or working with like a partner like Node40 that makes the connections to different exchanges, chains, wallets, etc., and then has that easy connection approach to go to that structure that's already up in SoftLedger. That's when I would say the SoftLedger magic happens, where we can record all those inputs from the different transactions for what assets are you operating in, which wallet, what rate currency are you, returning the price per coin in, all that different rich information that comes with digital assets, apply that at scale, and then run through our cost basis and journal building modules, which are just processes that run when you determine to run them, which get the per transaction cost bases, the gains or losses, and converts that into legible type of journal entries in terms of reporting in those different fiat currencies you have as your reporting currencies to produce financials that you can then give to your board or give to your stakeholders, auditors, whatever it is. So what we're really, really good at is once you have the structure in place and you have the pre-conditioned, standardized conditioned data, that's when we get the, enough information to take that, convert it into what you can really read in terms of making financial decisions from being a CFO, controller, or stakeholder, whatever it might be.
You mentioned a little bit of the pain point of volume. I mean, I know on our end, volume is it's definitely a pain point for a lot
Yeah.
of our clients. The other pain point is just understanding the data. I think there's always this perception of, at least even when I started, that blockchain was a very clear public accounting ledger. The data's there, but it's not as easy to understand it as people may think. There's numerous layers that have to be applied to that public block, even if you have transactions that are taking place on chain. And the data is not produced by those blockchains in an accounting readable format necessarily, or tax readable format, or whatever, or general financial statement readable format. And so once all that's produced, once you resolve the volume issue, why have the clients needed SoftLedger? Why couldn't they do this for themselves within the digital asset space? What has caused them to say, hey, I'm having trouble. Travis, team, can you help me out here on resolving this? I'm an exchange, I'm a miner, or whatever it might be. I'm a trader.
Yeah, it's also a great question. The amount of times I've heard blockchain is perfect, I could probably have a nickel for all those times, but it's a great transaction ledger, right? It has so much information that's included with it. But where there's a challenge, I would say, is like tying accounting to blockchain, right? When all those transactions are happening, you might not necessarily know how they need to be treated, right? Some can just live on your balance sheet. Sometimes you have to mark fair market valuation against them for reporting purposes. Sometimes you don't even own them, right? Like if you're an exchange or custodian, there's certain reporting requirements that you have to meet for holding assets on behalf of customers, for instance. You might be, facilitating transactions and trades, et cetera, for them, and you have all that information there, but you don't know how that differentiates from your treasury activity. So the nice things about SoftLedger is since we do have the different wallet, the different coins that you can set up, and the approach where you can have kind of like differentiation between company held and customer held assets, that helps apply a kind of a logic layer that's connected to whether it's on-chain data, exchange data, or what have you, to put it in the right buckets, which then get different treatment based on the bucket it's in. So if it is internally held, you are going to incur gains and losses from the changes in the prices of the different assets from when you bring them in and when you bring them out. But if it's the other, if you're holding on behalf of a customer, you really just need to show that you have this asset on your books, the liability that you would have to owe to that customer. So that's the complexity that I think people miss when they just think they can have their blockchain information, maybe get an Etherscan report out and show that to their auditors or whoever it might be. There's a whole kind of like condition piece to understanding what each of those rows are actually explaining based on the nature of the activity of what's happening for them.
Yeah, that's a cool point. I like that because from an audit standpoint, like you mentioned, these exchanges, as we know from recent history, there's certain certain assets held for and on behalf of their customers, and how do they prove that? How do they account for that as compared to the assets they're generating themselves? And it's really important to get that all right.
Exactly.
That's
It's
something that, yeah, go ahead.
I was just going to add that, like, in addition to that, right, that we're in kind of a regulatory, murky, right, type of industry at the moment, right? We're trying to create regulation that, at least in the US, right, that actually speaks to how people are operating with the different assets they're working with. But I wouldn't say anything's set in stone and final yet with what you actually have to report, how it's reported, how you're holding it, et cetera. Like the banking industry is it's been around much longer. It has these thresholds or things you have to do if you're holding customer funds versus things are very, very nascent and new in the digital asset industry. So it seems like we're trying to get there, but there's going to be bumps along the way. But you kind of have an understanding of what you need to do to be able to get to a place where you could pass an audit, for instance, if you're holding customer funds.
Yeah, it's a tough one. We've at NODE40, we've seen some companies come in from audit, but I know it's a highly risky area, and some CPA firms have used us for certain audit
Yeah.
and I know it's a developing area. Let me put it that way.
Yeah.
I think the industry is getting better, but I think the companies like NODE40, SoftLedger have to continue to develop, and I think the industry itself has to continue to develop with regards to how people keep data, how people store data, how people segregate the wallet addresses, even within different entities, within their structure, wallet hygiene applications, etc.
Yeah.
So there's a ways to go. I'll get to that stuff in a moment. Backing away for a second from digital assets specifically, you mentioned earlier, you gave a lot of great descriptions about what SoftLedger does. You mentioned some companies like that people that watch this podcast may have heard of, like Xero or NetSuite or whatever it might be, right? What is the difference? Like how does SoftLedger, and I know, but can you explain for our audience like what SoftLedger does that may be considered different and unique
Sure.
to these other companies?
Yeah, absolutely. So a really easy comparison I make a lot of the time is if you're looking on the Apple versus Android spectrum of kind of closed garden, open garden, SoftLedger to me is very much more towards the open garden Android concept versus QuickBooks, which while it's a great product, right, is very much the closed garden Apple type of concept where everything's very structured. Your chart of accounts is basically predetermined for you, and how your financials and such are created off of that is predetermined for you. With SoftLedger, we provide an enormous amount of flexibility because, like I said, we are serving customers all throughout the world where we very much stay jurisdiction agnostic. So if you have to report your financials in a certain way, you can map and set that up in our system in whatever jurisdiction you need to, right? We let you go about, setting all that stuff up based on whatever you've been required to do from your regulators. So it's much more malleable, flexible, I would say, than other systems. And then kind of coming down from the huge ERPs like a NetSuite or a Sage, I would say it's a lot more intuitive as well and easier to stand up, right? There's a lot of horror stories, I would say, around larger enterprises switching to a different ERP, and it takes, years. You have to have consultants to do it, and it's a huge change management process. We've heard that, right? And we make our implementations 45 days or less, right? We want to make sure you cannot run parallel books with another system if you're coming over. It's very easy to get your chart of accounts in, your entity structure set up. We map out those data sources like we were talking about before and go through that kind of trial run to make sure things look right for you within that kind of 45-day period. So while it is more flexible and kind of malleable than I would say, the QuickBooks or the Xeros to set up and run your processes like a larger ERP, we very, very much don't want you to have to spend a year doing it and not be, hiring consultants to figure out how the product works. So we try to make it as intuitive as possible. Since we're a little more modern, cloud-based, we can release things quicker, get to newer parts of our product more quickly in terms of enhancements based on customer feedback. So we very much listen to what they say and produce kind of new modules or new takes on different parts of the product already based on what they're saying.
And Travis, how has that malleability played out in the digital asset ecosystem in particular?
Yeah.
Seen it help customers.
Yeah. Just talking about how regulation is still developing. Things on our side of, digital assets moves faster than anything, right? So, hey, this new DeFi protocol is in place, or this new yield farming thing is happening where somebody is basically discovering how they can operate with this new technology in a new way. That's going to require us to be able to accept that type of transactional information in a certain way. So we've added things to our product that we've seen our customers using that basically help make it more flexible. Whether it's a concept of having custom coins in our system, for instance. While of course there's only one Bitcoin or one Ethereum, right? You can have multiple versions of that to be able to segment your cost bases against them, report them in different places on your financials, for instance. So we've kind of just seen where customers have pain points with any system and said, can we attack that? Can we help them with this and lessen their load or lessen like that possibly for error based on it? So we have enhanced the digital asset module, I'd say, just based on necessity, right? From the fact that it's moving faster than any other industry at the moment, I would say.
Yeah, the space there's constantly I've never been in a space with this many uncertainties and open areas where there's a lot of ambiguity as to how to proceed and people taking different positions because the regulators haven't come down with clear
Yep.
guidance yet. So I can see where SoftLedger with its more malleable structure could come into play pretty heavily in enabling people to kind of be able to quickly pivot from one set of standards to another.
Yeah, I mean, that's what keeps it exciting though, right? Talking to one customer, right, that you may say, hey, we're doing this type of activity, right? How would you recommend setting it up? We can provide best practices with our product, but we'll listen to them and actually then can bring that same concept to other customers. You run a customer advisory board on our side where every 6 months we talk to all of our customers and have them talk to each other. So it's this nice kind of knowledge share where, hey, there is a new liquidity pool or something coming into play. How is everyone accounting for that? Or here's a new regulation proposal from what, US or whoever. How are people preparing for it? So we do get that nice knowledge share, thought leadership, since it is a smaller industry and it is growing, that where one thing might help one customer, it's pretty much a certainty to probably help a whole subset of customers off of it. So that's what keeps it exciting, I would say.
I know you and I have worked together. We're friends in the industry. We exchange a lot of ideas. Like where do you see things going for SoftLedger in the digital asset industry in the next, let's just say 2 years, and let's just say the medium term? How do you see everything progressing as we have new developments, like maybe more TradFi players coming into the industry, Bitcoin ETF, a lot of
Yeah.
things I've been talking about a lot. How do you see the industry moving along and from a ERP accounting standpoint?
Well, 2 years in this industry is like a lifetime, right? Who knows what will happen in
Well,
two
medium
years?
term, it's more like long term.
Yeah, but I see what you're saying. For me, it very much seems like more and more companies in some fashion or another are adopting digital assets. Whether it is, hey, we're holding stable coins on our balance sheet or even Bitcoin, right? Or we're tokenizing certain assets and having different stakeholders be able to buy portions of it. In some fashion or another, people are operating with digital assets, whether they know it or not to start. So to me, it really seems like digital assets will become as commonplace as fixed assets, right? That you have in an accounting system. And if you don't have a dedicated kind of process system for tracking it, then you're going to be trying to piece things together, trying to use different journal entries all the time to account for that type of stuff. So to me, you're going to be just as often as you see a fixed asset module, you're going to see a digital asset module or some fashion for tracking it. Because if not, you're going to fall behind, right? You see all these announcements more and more currently of when the 10Ks and the 10Qs and all these different documents come out that show different publicly traded companies who are holding Bitcoin or what have you. And that's just what you see. You don't even see the underlying, like, hey, here's the NBA issuing NFTs for attending a game or whatever it is. Everyone's kind of starting to experiment with it, but we're getting to that stage where it's no longer an experiment. It's more of a strategy. And if you don't operate within it, you're going to fall behind.
Interesting.